Hi, this is Kurt Lyman of Alpha Beta Gamma Wealth Management, and these are plain facts about the capital markets. It was only 9 days ago that the U.S. stock market was setting record highs, and over the course of the past 8 trading sessions, we've seen the S&P 500 and the Dow Jones Industrial Averages decline in double digits, approximately 10 and 12% respectively. As well, we've seen tremendous inflows of capital into the bond markets. Those inflows have driven interest rates on the 10-year U.S. Treasury to record lows and on the 30-year U.S. Treasury to record lows as well. Because of that, and because we think that the Fed tends to be market-driven at this point, we are of the opinion that in March, it is highly likely that there will be a cut in interest rates somewhere between 25 to 50 basis points, or a quarter to a half a percentage point. If the Fed does not cut, our concern at that point is that we could possibly see some additional sell-off in the stock markets. I am of the opinion, however, that the Fed, as a result of the vagaries and the uncertainties relating to the impact of the so-called coronavirus, is probably going to reduce rates in March. We had been somewhat concerned after the Thursday close yesterday that the market could be having some mechanical problems because there was a big ETF selling overhang that didn't get executed. What was interesting this morning was that those executions appeared to be fulfilled with a high degree of liquidity in the marketplace, and that was, from our perspective, that was a good thing. And then throughout the course of the day, we saw the market continue to begin to rebound with some of the big tech names, Apple, NVIDIA, for example, recouping some of the losses that they had incurred earlier in the week. So at times like this, our recommendation to clients has always been, let's ride through it, unless there's a systemic issue, and the first place that would really begin to be established would be in liquidity in the markets. We're not seeing any significant liquidity issues here, and so as a result of that, we think that this is just normal corrective action. It had been expected to some extent. It's been exacerbated to a significant extent by fear and panic over this virus, and so as a result, quite candidly, if you're a long-term investor, we view this as a purchasing opportunity. If you liked Apple a week ago at $335 a share, you've got to really like it at $270 a share at the end of this week. So we're actually taking out our list and beginning to put it together for those companies that we think are worthy of inclusion or addition in weighting in our portfolios. You know, this is rather like a rough landing in an airplane. You come down pretty hard, you come down fast, and you know you're going to get a bounce. And then what you really want to do in that bounce is to make sure that you kind of smooth out your performance going forward. That's what we're going to be doing at Alpha Beta Gamma over the next several weeks, and we think that there's some real significant opportunity here. So as the sun sets to the west, and it's quite cold in Florida this evening, I want to wish you a great weekend. Thanks for watching. It's Kurt Lyman with Plain Facts about the capital markets. If you have any questions, give me a call or shoot me an email, clyman@abgwealth.com. Talk to you over the course of the next week or two.